2026, the global digital banking market is expected to grow by $10.72 trillion, driven by advancements in AI, according to a BCG report. The report also suggests that 50% of traditional banks risk becoming obsolete by the time if they don't embrace digital transformation. The data is quite unnerving. Hello, everyone. My name is Rajiv Jayaraman. I'm the founder and CEO of KNOLSKAPE, and I welcome all of you to another episode of the Learning Curve powered by KNOLSKAPE. And today, I have the honor of hosting Deepak Sharma, someone who understands the importance of digital in the banking space exceptionally well. Deepak is a seasoned digital leader currently advising some of the world's leading Indian and global organizations, including Fortune 100 companies, currently serving on the advisory board of Instabase. Deepak helps drive the company's growth in India, empowering enterprises to harness AI and Gen AI capabilities to transform unstructured data into actionable insights. In his very recent role as president and CDO at Kotak Mahindra Bank, Deepak played a pivotal role in developing and scaling the bank's digital business, notably through initiatives like Digital Bank 811. Hi, Deepak. Welcome to the Learning Curve.
Thanks, Rajiv. Great to see you again, and thanks for inviting me over.
Absolutely. Before we move to the discussion, Deepak, I have a quick rapid fire section for you. Are you ready?
Absolutely, shoot.
If you weren't a leader in digital banking, what field would you be in?
I probably would be Imagineer.
Okay, and what does that mean?
I love imagining about possibilities of what doesn't exist. And in fact, digital banking also happened because of that.
Right.
Digital banking didn't happen because of design. There was nothing called digital banking way back in 2013 when I started this journey. And even today, I love imagining possibilities and not just live in realities of today.
Awesome. That's great. And what is leadership in one word, according to you?
I would say two words, leading in uncertainty.
Okay, uncertainty. And in today's time and age, I think that's all around us. AI or human intuition, what would you trust more when making a business decision?
AI-powered human intuition.
Okay. The most underrated skill for future leaders?
Empathy.
Okay. Most exciting tech trend to look forward to in 2025?
Oh, 25, 26, 27, I would say AI, AI, and AI.
Okay. Okay. Yeah, indeed. That was a wonderful rapid fire section, Deepak. Thanks for that. We shall now move to our discussion. First of all, can you tell us about your incredible journey? I think you became a CDO before that was even a thing, right? And you've played variety of roles, digital roles in the banking industry. How have you seen the space evolve over time, and what got you here?
No, I think great question. You are giving me an opportunity perhaps to reflect upon a journey of a decade. This happened way back in 2013. Just like most bankers, I was pretty much involved in building and leading various businesses, some domestic, some international. Obviously, that gave me opportunity to travel around the world, see a lot of what was happening in different parts of the world. And India was just moving into a 3G network. Today, we are talking 5G and then moving to 6G. Way back in 2012, 2013, I think we were just moving from edge to a 3G network. We had started to see some very, very early smartphones coming into market. There was an era that iPhone came, HTC, and many of those devices, if you could recall, just started to come in. And banks are looking at creating a mobile app. They all had internet banking. But typically, we were living in a desktop era. We were just moving into the mobile era. None of us really knew what would have happened for a decade from then. But I think those were the early days. All we realized is a country like us needed to think beyond obvious. Also, perhaps the role that and the bank that I was part of then found that digital becomes a strategic fit into the growth of the firm. And I realized this much later that it's not just about me; it's about the context in which you operate. And either you keep growing more and more in the physical world, draw more resources, build more distribution, or you start thinking about, is there a better way to go acquire and serve customer? I think while those were very early days of digital, in fact, a lot of people were not even clear of what digital means. So there was a pretty much a lot of evangelization around educating people at different levels. Everybody confused digital with IT. Everybody thought, oh, this is technology or something. Is this automation? What exactly digital means? But then I got over a period of time my own definition of digital, also being the first, perhaps the chief digital officer in the country. Uh, I mean, that community was just non-existent then. I think today we have still a pretty large and well-established, well-aware community of digital leaders across industries and not just financial service. And I realized digital is a different way of executing a strategy, challenging status quo, of failing to just do incremental stuff and then go back and question uh, pretty much the way you would like to build, grow, transform, and change your business, either to serve existing customers better or go and acquire new customer segments or enter new market. So digital became, in my mind, a way in which a strategy can get executed better, leveraging technology, leveraging digital design, but also about people and culture in the process.
Awesome, great. And I remember the first time we met, Deepak, around the time I had published this book called Clearing the Digital Blur, and banking at that point in time was getting completely blurred from growing into a platform to the whole concept of money becoming completely digitized. And this is even pre-pandemic and post-pandemic. We've seen how the digitization of money has happened over time. And also, banks have become a lot more ecosystem oriented. We've seen quite a lot in the last decade or so, and you've had this incredible vantage point to see all of those changes happen. So it's awesome.
Yeah, absolutely. And I think we were fortunate to be part of this journey in our country's history when the country transformed like never before. I mean,
Yeah,
I keep saying that the single biggest chief digital officer and transformation agent in this country has been the government. A lot
yeah,
of what we see today is thanks to the whole digital public infrastructure, uh,
right.
right from your jam to now we are talking about ULI to the way the data is, uh, infrastructure is getting rolled out, data center and cloud getting massive push. So I think it's all happening around us. All I say is digital leaders in private enterprises have to leverage on top of what is getting built as
Right.
part of DPI. So I think yes, it's a great time to be a digital leader because one may look smarter than what you are because of all the tailwinds that are helping you move faster and ahead.
Awesome. That's a great segue to my next question. In sectors like banking and finance, a gap between digital leaders, like the way you're talking about, and the laggards is growing, right? And with the top performers showing up to 60% improvement in digital and AI maturity for a pretty long time. What, according to you, are the real differentiating factors between market leaders and those struggling for survival despite being legacy organizations? They've got the resources. What's sort of holding them back?
No, I think great question. As you asked, I was just reflecting upon. To me, it looks more like a Maslow hierarchy. Some organizations are barely trying to survive to make sure they move from quarter to quarter. That means they don't have enough fuel to think and last longer, or probably start planning of a 3 year, 5 year kind of a journey. I think companies that are just thinking in short run uh, are getting tired, are getting left behind. because the disruptors in the industry are not just another player on the street. I think the disruptors are coming from very different categories. I remember like 4 or 5 years back, most events had a discussion, oh, are fintechs going to eat banks? And I kept saying that fintechs won't eat banks, but the bigger banks, smarter banks, agile banks will eat smaller banks. And that's what happens in every single industry. Yes, there will be product substitutes. There'll be platforms that will start getting more eyeballs. For example, in payment, today you see that a lot of fast payment businesses moved away from banks. So I think a lot of those things may still happen, that some part of business may completely get disrupted. But largely being a regulated entity, be it insurance, banks, NBFCs, they still have, I would say, a more stronger footing on the ground. So I think within those categories, like you rightly asked, the fast mover, someone who's thinking long term, they lead the pack. And that's why in every single industry that you talk of, there are very clear, visible leaders, because they are delivering results for today through set of transformation, looking at more of the productivity, efficiency kind of initiatives. They are also at the same time building capabilities to move away from product mindset, traditional distribution mindset, to more platform and a digital or hybrid distribution model. They're also investing a lot more in future ready capabilities, be it in terms of thinking of what is the data strategy, what's the AI strategy, how do you build, create, or orchestrate ecosystems where you work with players who together come and create value. They are thinking about, and that's the first thing I mentioned, the Imagineering. They are imagining how the customers, their preference, the market dynamics, the regulation, all of that will change. And thereby, what do you do today? Because you just can't wake up one day morning and now you realize as the reality or ground under you has changed. You go back and start rolling out set of initiatives. And I think that's what laggards are doing. So laggards, it's not that they are not doing things, but I think they are waking up slowly. They are also hoping that the world around them won't change as fast as it is. And thereby, I think the investments, be it on people, on technology, on culture, prioritizing their strategies, and within strategy, not about what to do, but deciding what not to do.
Right.
Those are becoming very, very imperative as to how organizations are differentiating themselves. And a lot of this is a long, painstaking process, because it's not about just putting in more money and hoping that you will be able to move fast. And I think building each of these blocks takes time. So those who have invested and those who are building it differently will see a different outcome. And I think that's what we are seeing.
Awesome. That's a great response. I think if you flesh your answer out completely, that's a book on innovation. As I see it, very structured and very comprehensive. So, two questions come to my mind as I listen to that response. One is, how does one keep the innovation engine going when just keeping the lights on? With so much compliance and regulatory pressure is around, how does one get out of this trap of thinking short term and thinking about just surviving to keeping the lights on? Because that can be all consuming. So, from a leadership standpoint, what were some things that you did differently to get out of the trap?
No, I think again a great question. It's not a question of either or, because if you do not deliver on day-to-day smooth operation of business, be it on in terms of IT security, resilience, platform stability, doing same thing day in and day out with rigor and even better, you just do not have opportunity to go and build that cool, jazzy stuff that you may all be excited about. And it does happen in the organization that everybody loves to go and build something new because they feel that that's more exciting, that's going to get more attention, and thereby they probably feel more motivated to go and build. But very few people love to sit and run and maintain. I think organizations are realizing that uh, you need to first save your today or protect your today in order to even have a game for tomorrow. Thereby, I think looking at set of initiatives, resources, operating model, it all becomes important. I think there was a time everybody used to say, go agile, break things. I don't think, at least in financial service, a lot of people say that today, uh, because you just cannot afford to break things. I mean, you are
Right.
a regulated entity. You try to be too risky. It's like an automobile which says, oh, I'm going to build a great acceleration, but my brakes may fail. Sorry, I mean, you just cannot sit in that car. I think
Right.
same thing is happening to all industries around us, that you have to grow responsibility. That means risk, regulation, security is not a job of a function within the entity. I keep saying this because also now I'm on board of a bank and I do a few other board responsibilities, and I see things now from a very different vantage point than what I probably saw till last year. Uh, how do we create a product and innovation mindset with understanding of risk, compliance, and security? And I think if everybody starts to understand that these two worlds have to be one, it just cannot be two separate worlds. A product guy cannot be thinking of a great product idea just to get shot down by a risk or a regulation
Right.
or a security guy. He has to bring that in the product design and the delivery model. Similarly, I think the whole operating model, you just cannot say everything will go agile. Sorry, it doesn't work. I think some things which are more solid, more stable, like your core banking, some of your under the hood massive engines that processes the hundred thousands of transactions every single day, running at 1,000, 2,000, 5,000 TPS. It needs a precision and perfection. And that
Right.
means the less tinkering you do, better and more stable the systems are going to be. So I think organizations are realizing that they need different operating models. They need to bring in the risk, regulation, and product mindset together. They need to figure out where they need to move fast, but where they need to be extremely cautious.
Right.
Also, I think how to take measured bets in certain spaces. Given a choice, we love to be everywhere, but it's just not possible. And I think the last, I would say, in this, organizations are realizing it's not about building and launching many initiatives. It's about finding that each of those are scalable, or they
Right.
are connected to customers' pain points or customers' desirability or affinity. And that's why many of these initiatives fail to create a great ROI. So, how do you even prioritize and see that those initiatives are becoming value accretive for the firm? Uh, so, I think in 10 years, when I started to now, I see a lot has changed and it'll continue to change. And I think that's the beauty about these conversations, that every time we meet, we will have a new
New
story,
things to
a
talk
new
about.
take on
Right.
those things, because things are just so dramatic, changing all the time and dynamic.
Awesome. I like the framing that you're talking about. One is perform and then transform. Both of them have to go hand in hand. Some organizations talk about run the bank and transform the bank. Right, both of these have to go hand in hand. So I love that framing. The other thought that came to my mind, and I think I picked this up at Kotak when we were working with them on building future readiness around digital, is questioning the word bank itself. Now, what does that word even mean? Right? Is it about deposits and loans, or is it something else? And I think the penny dropped when the senior leaders realized that that word perhaps doesn't accurately capture what the organization actually does. The mission should be around being a lifestyle partner. So when that framing happened, then I think the bank should be everywhere. There is an economic transaction. The bank should be
Yeah.
there, right? Gone are the days when we think about bank as a physical location where people go to. And I always ask people, when was the last time you set foot in a branch? And people talk about they can't remember the last time. But then banks are everywhere. They're embedded in every transaction. I think that's the other mindset shift that has happened with some leaders in the digital banking space, whereas laggards probably are carrying that older mental model still around.
So let me take a new shot at that. Uh,
Yeah.
as I'm thinking, I won't even say bank today is a lifestyle space. Sorry, I'll do other things if I have to do it. Why would I even think of a bank? I don't
Yeah.
wake up every day morning and think of my bank, whichever bank it is,
Yeah.
as a consumer or as a small business. I think we all want to do better in life. Bank to me becomes, in today's context, more of a symbol of trust.
Yeah.
And then as the business models have changed from a physical branch to a digital, now to embedded, like we just mentioned, how do I find it wherever I am? Finance at credit at checkout, or probably invoice discounting on a e-marketplace, or probably taking getting someone to fund my dreams for my children's education abroad, or my travel or insurance. uh, I think a lot of fintechs, a lot of other players can do some part of it better than banks do. And let's agree that banks cannot be better than all of them in parts. But I think where banks can still be a lot better collectively is, how do you embody trust in whatever you do?
Right.
If banks ask you for one additional factor of authentication because they want to keep your money and transactions safe, I would say it's okay. I wouldn't hazard saying, no, look, I have the fastest experience like a fintech, but it may put you at a small risk. Are you okay with it? I mean, I'm just thinking aloud in today's context, Rajiv. And I would say what will continue to define and create unique proposition for a bank is, how do you keep redefining trust, be it now data privacy era, by it in terms of not having the conversational thing, or creating data vaults so that your data is safe, keeping customers' money safe. Uh, so making sure the systems are resilient. When you need to move money, you can access digitally your bank. A lot of that collectively will redefine how the banks, like the same thing, leaders versus laggard, right? Everybody will have a banking license. But I think if I look at a definition of a bank now, is about building something which is core anchor of trust around my financial wellness and money.
Right. Awesome. Great. With several industry reports suggesting that between 30 to 50% of financial services employees will require reskilling over the next 3 years, where do you think the biggest gaps are when it comes to skills, and what are organizations doing about it as we speak?
Well, again, I would say that's a great question, because finally we all have ambition, but some of the parts we discussed, like change in operating model, right? Change in operating model also means that there are areas where you need to really move fast. You need to own a lot around the customer experience, design, development. But at the same time, you need to have some solid heavy lifting for your core systems and your resilience. So I think one of the key areas that I'm seeing coming around strongly in banks, most financial institutions, and not just banks, are looking at it is, how do they own a large part of their technology roadmap? Just like you never outsourced a risk function or a compliance function, why should you even outsource a technology function? So I think you cannot completely be 100% in or 100% out, but and that is leading to finding new talent and also reskilling some of the existing ones. So one is on the technology, getting people to be more cloud native, understanding what are the architectures, deployment models, cloud security models, or looking at the whole data privacy, looking at the whole payment security stack. So everything to do around technology for today, but importantly, how organizations are becoming more and more technology ready. So technical skills are becoming extremely important. I think the second thing I'm seeing it is, a lot of products are no more about managing the traditional financial fee and charges kind of product. It's about understanding customers, customer empathy, running design
Right.
thinking workshops, creating user stories, dashboard, doing early prototype, going and testing it out, and then either rolling back or scaling it up, whichever way it works. So I think that's the other skill set. That's the whole product management and product design thinking. Again, banks were not built around those skill sets. So that's something that banks are trying to find a right balance between attracting new talent, but also reskilling a lot of existing stuff. The third part, if you look at it, is there are many functions in the bank, be it contact center, operations, credit. They were largely automated, but they were still more manual with some tools of automation. I think AI is changing a lot,
Right.
especially your whole credit underwriting engines. It can assess real-time data from hundreds of data points and can take a real-time decision, or contact center with call steering capability, operations pretty much running end-to-end workflows which are automated. So I think the third skill sets I'm seeing is even roles that were more human intensive in the banking industry. Uh, it's not that technology is completely going to replace or make their role or make them redundant. However, how do they embrace and work along with technology? That means becoming more of the hybrid workforce, where a part of the workload will be done through tech. When there is a call steering happening, a bot is going to keep scoring and listening to you and give you prompts, while still as a human, you will take those prompts and can override. So working alongside and thereby understanding that data and training model will in some way coexist with the human interface across financial service. Uh, I think also technologies like, so that's the third, right? We're talking about, and fourth, I would say is the whole MarTech and the sales piece is changing dramatically. Uh, Customers are not walking in through the doors anymore. Neither can you find customers on the street anymore. So I think thinking about the whole MarTech and sales again is a massive transformation from skilling that financial institutions have to focus on, and they are doing it. But are they doing it enough? I think we can debate. Uh, so yes, I think sales, marketing, operations, customer service, technology, you name it. I would say every single function today, just that they all have a different level of changes they'll have to go through in terms of staying relevant and more productive. But the entire workforce transformation is a major, major area of, I would say, change that financial institutions need to go through.
Awesome. I love that answer. Again, very structured and pretty deep. You said and AI for 25, 26, 27, and into the foreseeable future. So it's very clear that AI is going to reshape, banking and many other industries. So if we did a thought experiment and we imagine, in the spirit of imagineering, how does a bank in 2030 look? What would have dramatically shifted from now to 2030? And if you can speak about readiness of banks to embrace that kind of future, that'll be great as well. How ready are organizations for that kind of a future?
Great question. 2030, that's 6 years from now. Okay. None of us knew way back in 2017 what a 24 would look like. So
Right.
I'll still take a guess, but little wise guess with some logic. I think one of the things banks will increasingly, I'm talking about the leaders and I'm not talking about all financial institutions. I think few things that I'm taking, I'm strong conviction is, I think the whole credit and lending ecosystem will dramatically change. When I say dramatically change, I think different kind of credit instruments, be it a credit card or a personal loan or a loan against property, mix of secured and unsecured, either for business or for retail consumers. I think that would move in a big way on different railroads. So there'll be set of credit instruments and there'll be railroads like UPI. I think it will become one. That means a point in time credit access at different touch points, and not just for a consumer durable finance, but any kind of things. It's all going to be available on the fly. So we are going to move more and more towards on-demand economy, just like what cloud is on demand, you provision it on demand. I think even financial services across, led by lending and credit, because that's where maximum customer pull is, and it will continue to remain that way. I think that will become more like an on-demand finance. So that means I know I have a credit worthiness. Whenever I need to borrow, whether I want to borrow for a day, which is my OD, or whether I want to borrow for a year, I'll have access to credit on the fly at a point of consumption. And this will become real thanks to either the open credit network, digital public infrastructure, the whole consent-based architecture through account aggregator frameworks, unified lending interface, pretty much all the constructs that I'm seeing around the LSPs and embedded finance network, all of that are anyway going to create, and they are building the necessary ecosystem too. And there is a desirability on part of customer to do that. The second is, I think, all customer services and operations across financial institution would be AI-led. It would take over, if not anything, at least 70 to 80% of the workload, including your early warning system, fraud detection, risk mitigation, alerts and escalation mechanism, handling customer fee and charges to basic issues. That means there'll still be some part, but it's enriched human interface, but largely large volume of lifting under the hood will be largely led by AI set of engines. I think third, I would say that most banks today, we are talking of digital banks and non-digital banks. I think every single bank which is a leader will build what I call it as platforms. And that means they won't have multiple products and multiple channels, but they'll be platform operating model. That means it's built around consumers, it's built around businesses, it's built around large enterprises. So you'll typically have 3 or 4 platforms which are built around set of customer or businesses and their needs. And every single product or service will dovetail into those platforms. Because all of us as consumer, we may have different needs, like we spoke earlier, which takes us back to the bank, whether it's invisible, embedded, but at the end of it, there is something that a bank does, if not at the front end and the back end. And the platform operating model will become the way. So I definitely see these 3 for sure. And I think banks will invest a lot more on being future ready from risk, regulation, compliance, security, identity, privacy. Things like these will ensure that banks stay relevant, banks become scalable, and they have a right to be the place that customers trust to put all that, their wealth and everything like that. So yeah, I think these in my mind are 3 or 4 bets that I'll take for 2030. And these are all safer bets. So
Awesome. Yeah, I can
hopefully
totally
be proven wrong.
see pretty much all of them coming true. And one of the things that we speak about, Deepak, at KNOLSKAPE is, to be future ready, organizations have to futurize, right? Embrace AI, embrace digital. That's the way of the future. But we also need to personalize and humanize. That's the place where the human element also comes in. So I have 2 questions here. One, in all the transformations you have led, in the past, and whatever you're getting involved in now, how do you incorporate the element of personalization? Because that's a great promise that AI has got. The other question is around humanizing, right? With a lot of introduction of AI, one thing that we are hearing is the whole element of trust and psychological safety from the recipients of that change, right? So how does one actually build that as you are preparing for introducing more AI in the organization? What are some cultural foundations that have to be put in place?
Again, great question, Rajiv. I think personalization is still an easy problem to solve. The humanizing is a tough one. So let's take an attempt on the second part. But yeah, personalization, I think what has started to happen, obviously, is personalization at scale. While I think it's a good concept, we all heard and read n is equal to 1 many years ago,
Right.
and models of Spotify and Netflix, and many of those we have read great case studies. But then I think at times I felt, having gone through that path myself while building certain digital assets, that you still can do things that customers are not ready for, or you find set of better behavior and cohorts to create a set of services. Today, probably on a scale of personalization, if we are at anywhere 0 or 1, I think if you can move to a scale of 5 or 6, it's a good start, because what personalization is trying to solve. Let's pick up 2 or 3 things. I come to an IVR and I still have to listen to those 8 or 10 menu options. Why? I mean, who am I? What do I do? What products or relationships do I hold?
Right.
Why do I have to listen to that music and wait to punch a correct number? Horrible experience. And it's not about bank, it's across the industry.
Right.
I go to a digital channel, be it a website or a mobile app, and I still see hundreds of tiles and cards. We have heard enough about, there are tools that can personalize, but the challenge were two. One is uh, a lot of data that you require either for a real time, or you keep it in cache and serve it only when customers log in. The cost to personalize and the effort to personalize versus the outcome of personalization probably didn't convince a lot of people that, should you personalize at scale? And I keep saying it, don't personalize at scale, but at least start making it more curated for different customer cohorts.
Right.
I have only a credit card relationship with you. You will love me to buy 10 other products, but don't first show me those 10 other products. Just give me the experience that I need every time when I come to you,
Right.
fast and quick. So I think things like those, the journey has just started. There is a lot of work to be done, because I think the whole data stack is where most financial institutions in the last few years have invested. Hopefully, they have a better transaction data, but they still have less and less of unstructured data around consumers.
Right.
So unless I know what is your desirability, what is your intent, what are you likely to do next, how do I even go and personalize? People will say, you're just showing me something which is irrelevant. Personalization of marketing, message, and communication has already started to happen. A lot of it you will see, because where you know the intent, you can go and personalize certain stuff. I think intent engine is still not fully baked for financial service, while transaction, profile, persona, relationship is known. So that's a great opportunity. I think the second part that you mentioned, that's a real challenge. We all, it's not that as human, all of us have empathy all the time. I think otherwise, a lot of institutions won't rate, or customers won't rate these institutions low on customer service and responsiveness. So I think humans have a bad day. Not all humans are equal. With AI, I think the challenge is either they can be universally bad or they can be reasonably
Right.
good. But whatever they are, they'll be at scale and more consistent across the board. And second, it's a lot more easier to audit, train, and improve them over a period of time. I'm not denying that training human is any tough or easy, because you have been in this space for really long. So Rajiv, I'll go with. But I would definitely say that the real gain or outcome will be, like I mentioned earlier, will be more of hybrid workforce.
Right.
And that means that some of the basic rudimentary things machines will continue to do a lot better. But will they end up completely replacing or doing things that humans do? Largely because of the human factor of interactivity, responsiveness. Maybe at a time when customers are too mature, and we all live in that era where likes of Claude and OpenAI has just changed our behavior so much that
Right.
we'll say, I want to live in that universe and I don't even want to talk to humans. Maybe for some customers, that could be the way. And they are okay with less of empathy and human factor, but more with accuracy and on the fly information. Uh, but I think in a country like ours, we'll continue to see both worlds coexist for a long time, because at the end of it, one thing within financial institutions is clear: whatever outcome your AI is throwing, as human, we are responsible.
Right.
So AI cannot be a black box. AI has to be an auditable and traceable model through which you can go back, and the accountability still rests with humans. So I think we are not going to run. We'll run a co-pilots, but we'll not move to an autopilot anytime soon. And thereby, I think the question that you asked, that will continue in my mind for a good reason. We'll continue to find the right balance between both the accuracy and speed, but with human factor.
Got it. That's awesome. So the next question is about what advice would you give to three people? One, a senior leader who has grown, risen through the ranks of an organization by excelling in a certain playbook, and that playbook is becoming completely obsolete. What's your advice to that person? And mid managers who are in the business of translating some strategy into execution today, that is also getting disrupted. To a person just entering the workforce right now, the question that I often get asked is, what should I be focusing on? Everything is changing around me. So I can't even think 5 years, 10 years. In interviews, we usually ask, how do you see yourself in the next 5 years? Most people, leaders also don't have an idea of what the next 5 years, hold for all of us. So what will be your advice for senior leaders, mid managers, and people who are just entering the workforce?
Again, a tough one. I think you kept a lot of tough questions for me. Uh,
We reserve tough questions for the best people out there.
yeah. uh, See, I think for a senior leader, because they are obviously the captains of the ship, and a lot depends on how a captain navigates through both the choppy water, but even when water is calm, uh, anticipating that there'll be turbulence ahead or there'll be surprises ahead. So I think a leader has to, at a senior leadership, look at all scenarios which may be on the horizon, or even the ones which are not on horizon. Uh, Getting prepared for those uncertainties, in my mind, and being in financial service, I think every leader has a risk mindset. But the risk mindset is more about understanding and protecting the regulatory, credit, market, operational risk. I think leaders need to add another, I would say, lever to it. That how do you build more of a VUCA mindset as a part of your leadership? Because the marketplace that we operate in, there'll be changes in regulation, policy, competition, technology, people skills. How do you plan and think about the variables today which are not part of your business operating plan or a strategy? Uh, Second, I think surround yourself not just with the people that you are comfortable with, or those who have been part of your ship for long, but bring in some disruptors, some challengers uh, into the core operating team of the firm. Because they may ask uncomfortable questions, they are not necessarily there to be popular or to take your position. But then they bring in a great amount of sense of trust and confidence that you are not missing out on certain things. So I think creating a diverse, challenging set of people alongside obviously those who are running a steady ship, that mix is going to be an extremely important thing. And how do you integrate them? How do you make sure that they have a voice on the table? And thereby you are also changing some part of the firm. Third, I think on the strategy, be very clear about what you will preserve. Uh, that means come what may, and it can be more around your ethics, it can be about your core of beliefs, it can be about certain customer segments or targets, which you will protect at all cost. And thereby, a lot of times, I think I've seen leaders investing a lot of money and time into building and creating new markets. Back to Alexander's principle,
Right.
but less about retaining what they already have, and which can be pretty valuable to a lot of them. And that requires, for all you know, a lot more time and effort and investments, because what you may grab will be a smaller part, but you will end up losing a significant part, and that's a bigger risk I see with leadership in some places. So what will you protect at all cost versus where you will challenge and the markets that you will create or opportunities you will create? Finding a right balance between the two from strategy perspective is extremely important. And I think if these are clear, then translating it into set of priorities, KRAs, across the firm becomes a lot easier. And the fourth and last, I would say, is once you have decided to put all these, I think communication was core at key, because as organizations are large, this should not only remain in the hand of or in the heads of few people. How do you make sure that what you believe in is embodied in terms of culture, in terms of communication, in terms of making sure that teams both believe in it and they are part of it? Because I think there are a lot of times leadership operates a bit in isolation or is more top driven. I think today's workforce wants to be included.
Right.
And I think they are driven more by the purpose rather than just by pay or position or purpose. So converting, I think, each of those initiative into a purpose, and through purpose, connecting it with the people through set of communication and interaction. Maybe a little longer answer, but I would say these four. Uh, for middle management, I think pretty simple. They have to be always on the watch, because everything around them is changing.
Right.
Their leadership style is changing. The people that they manage, their aspirations are changing. The loyalty of workforce is diminishing. People don't come just for work anymore. They look at learning a lot more when they are at work. They want to skill themselves and make future ready. So as leader, I think the biggest challenge in middle management is, while you have to deliver and be effective, but at the same time, they have to constantly reskill themselves, both where they stay relevant, but also help their team and people skill and improve. Otherwise, they'll be in a tough position in terms of attracting or retaining talent.
Right.
And if you're a fresher, I would always say that look out for opportunities to learn. Always, I think roles which is giving you opportunity to learn are far more rewarding and are going to be more relevant than just where it's a job. So, yeah, so do question wherever you are joining that what is going to be my learning quotient? Is there a learning roadmap? What am I going to learn, solve, build, get on to? Because otherwise, I think the shelf life for, unfortunately, freshers can be much shorter.
Sure.
Because they have a long career ahead. And I think if they compromise learning with anything else as a substitute, I would say that's like getting really a wrong call very early in their career.
Absolutely. I so resonate with it because one of the things that I often say or write is this one liner which says, machines are learning. The real question is, are you?
Yeah,
Right.
absolutely.
So,
Bang on.
yeah.
And it's true. Even when
Right.
you
So,
go to
continuous
sleep, machines
learning.
are learning.
Right. So, that leads me to the last question, Deepak. In the spirit of continuous learning, when was the last time you did something for the first time?
Oh, I do many things for the first time. Probably that's a problem with me. I mean, I whatever I don't know, I just get my hands on, and that's how. So I did a bit of Python programming
Wow.
because I said let me go and learn a bit. And interesting thing is, my son, he's an engineer in machine learning, and he's a computer science engineer. There was a time I used to teach him. Now he at times mentors and teaches me, and it's a reverse role. And I have got a young set of founders, people with whom my weekend sessions are more about learning new business models. What are they building? How are they getting into problem solving mindset? And I think that's a good thing that I keep surrounding myself with interesting people and interesting topics. And yeah, I think I'd spent, in fact, last year, I'd spent a year at MIT, even going through a
Okay.
technology leadership program. And there again, both in campus and outside campus, meeting with people from around the world, I think over a period of 1 year, I think it was a great experience. So I think learning never stops. And I personally enjoy doing that all the time.
Awesome. That's so inspiring, Deepak. Thank you so much. I wish we could go on and on because I'm just absorbing everything that you're saying like a sponge. It was so fascinating to hear, firstly, about your journey and the transformations you've personally driven and your outlook for the future as well. Very structured, very deep. I'm looking forward to a book from you at some point in the future. So thank you so much for your time. And thanks to all our viewers and listeners for tuning in to the Learning Curve. We shall be back in the next episode with another great personality and insights on making organizations and leaders and the workforce ready for the future. Until next time, take care and goodbye.